The world in a panic, the women is stranded, the men on the run, the profits abandoned, the law take advantage, the market is crashing, the market is crashing, the market is crashing, the market is crashing.
What's going on, guys? We're going to be looking at technical analysis on the indices. We're going to look at the top holdings in the indices as well. We're going to skip the bullish and get straight into technical analysis. All right, guys. So we're looking at falling wedge, which is a bullish pattern, trend reversal type candle on increasing volume. Technically, this is not a hammer, but the price action is similar to what you would expect out of a hammer. This long wick to the downside, basically telling us that sellers brought it down to this point intraday. Next thing you know, buyers didn't like that level, so they brought it all the way back up to the support level that we had that's been respected in the past as well. You know, you can draw this wherever you want, but at the end of the day, like I respected it to the when it was coming down to the downside as well to the upside as support and or resistance. Um, but it's hard to be bullish in these markets, especially considering the fact that the overall trend has been down. You could argue that this is a channel that's just been going bouncing back and forth between like a ping pong ball. But there is indicators and signs that are bullish. Also, but there's things that we need to get above is this gap that we filled recently, this 400, 403 gap. If we get over that, then from there I'll turn bullish. Areas to watch is declaration of war. What happened over here on February 24th, these lows, as well as this line right here, 416-ish level. If we could break above that and play it up to the upside to those levels, there might be even more potential upside that we'll get into in another video. But again, falling wedge pattern, we're in the middle of it, so it's not good to go long or short. Just play the breakout of either way. Even some of the indicators I'm gonna pull up here in a little bit are saying the same thing. Crazy price action, man, this past couple of weeks. Look at some indicators. This is anchored VWAP, deviations of it as well. We got the neutral, which is in the middle. We got 1, 2, 3, and 4. We've been trading in between the second and third this past week. Again, once again, no man's land. So if you would have played the trade down here, it would have been offered great risk to reward. If we would have played it up here, great risk to reward. But we're in the middle. Again, don't try to do that. Don't try to front load or try to guess where it's going to go, or else you'll be stuck with the bag holding like I am. Bollinger Bands, again, deviations 0, 1, 2, 3, 4, and 5. We've been trading between the third and the 0, basically this whole entire trend since April, late April, bouncing back and forth. Again, no man's land between the first and the second. So we're neutral at the moment, neutrally down and bearish. Areas to watch the downside, you know, you got this 381, 376-ish, and 371-ish level to watch. I'm honestly bullish, but I'll get to that in a later video. That's the SPY. Let's look at the QQ. QQ is the same story. You know, 4 touches on this bottom trend line, touches on the top one, bouncing in between this, getting super tight. You can argue this is a channel right here. Trend reversal candle, increasing volume or increased volume, higher volume than average. Uses this gap as support, 280 level. It's nice to think that you could go along, but the overall trend is down. So just react. Don't try to anticipate. Indicators saying the same thing as the other one. Been trading between these two for the past week and in the middle of it. So don't try to go long or short. Same thing with the Bollinger Bands. Been trading between the third and the 0. We're currently between the first and the second. So don't try to, again, guess which way we're going to go. Relative strength index. I mean, overall, it's just confirming that we're in a downtrend. You know, it's just keep putting in lower highs, excuse me. And then we can even look at the EMAs. Even the EMAs are not looking good either. You know, all the longer time frame ones aren't going to tell us anything just because they're above the price action and they're all curling to the downside, which is once again confirming that we're in a downtrend. It's nice to play the EMAs because you can ride them out until they eventually break. And from there, you can just sell your position. But we haven't even got above it. If you were playing a short position, you're waiting for it to close above. You got faked out twice. Once here and once here. I was actually convinced here because we had increasing volume. The Fed was dovish, definitely giving us possibility of getting another rally like this, but we didn't. Ultimately sold off. Again, the downwards trends have been on increasing volume. Upwards trends have been on decreasing volume. Downwards trends have been on increasing volume. You know, it's just been ping-ponging back and forth, guys. EMAs, like I was talking about earlier, though, we haven't had a significant close. Again, fake out here with the resistance of this trend line. You know, we need to get back above that in order to start being bullish again. Or to think of a trend shift type idea. All right, we're gonna look at the indices and what we're possibly seeing on not the indices, the tickers within the indices. What we'll possibly be looking at for those. We got Apple been getting completely obliterated. They had some lawsuit news, I think, right here on the 18th. That's just been driving them down. But we are at this massive level of support. You know, this was resistance in the past that it struggled to get through. What is it, five? On the sixth try, it did. Because I consider this a sixth, one of the third time, excuse me, because it ultimately broke through, but ultimately failed. Uh, Hit it as support there, hit it as support here. Will we bounce now? We have a trend reversal type candle here with pretty high volume. Possibility is there, and a lot of potential upside to be if we're being honest. But you know, overall trend is down. There was a downwards trend channel. We had a breakdown, retest, and down with increasing volume. That's definitely bearish, not looking good for the future. But we could get a play to the upside, retest this long-term trend line, and eventually ultimately fail to the downside because my long-term uh, not estimate or guess or prediction, but I call it more of a prediction, is to the downside. And also, Apple makes up 12.5% of the S&P 500. So since this one has the most potential out of all of them to the upside, as well as Amazon, you know, it's pretty bullish. That's what almost 20% of the QQ itself. Again, massive support that we're at the moment. You know, these are all pre-COVID levels that have acted as major resistance. Ultimately, we come back to them and add hit support. What's not looking good on this one is that we had a downwards move, increasing volume on the way up, but we ultimately hit this falling down with even more volume, and it's basically a breakdown, retest, breakdown. So when we come back to test this again, will we fall or will we go up? We got this gap to fill this upside, but overall the earnings were bad, and the outlook for the future is bad as well. But we have something that's very important. The stock split that's coming up next month, or was it July? I forgot which one it was. But that's definitely going to be a bullish thing for Amazon. There's a lot of people going to be wanting to buy it up, just like Rivian. Like all these people like these brand new stocks. I won't say brand new, but whenever the news comes out, boom, rally up. But what's ultimately going to happen long term? Down, my boy, down. So let's go ahead and go back to Amazon real quick. Touch up on the last things about it. Again, trend reversal candle, like all the other tickers basically have uh, upside potential, but overall trend is down, and there's not a good outlook for Amazon either, as supply chain issues are still going to become a really really big problem. Microsoft, we have a head and shoulders pattern. The leg will not ultimately, but ultimately fall down. Should fall down to the 237, 238ish level. We have a lot of room to go to the downside, but one of these levels right here to look at is this right here. We got this 252-ish level with the hammer candle at the bottom of a falling wedge, which kind of looks like the QQ to be honest. And this is definitely a bullish setup, candles and pattern. I mean, and this wedge pattern, but the head and shoulders still has a little bit to fall, so technically we could go to the downside. And kind of like on the QQ as well, we have increasing volume on the way down, decreasing volume on the way up, increasing volume on the way down. You know, it's just overall a bearish trend. This is a major component of the S&P, not the QQ. But we have a potential inverse head and shoulder that could, I mean not head inverse, a regular head and shoulders that could play out on Berkshire Hathaway. Shoulder, head, we're at an area of basically a demand zone. It used to be a supply zone, you know, as it was being a resistance. Maybe I'm saying I'm backwards because I really don't use these, but basically a zone of support and resistance. We could potentially get a back return to 325-ish from there, ultimately dying because again my outlook is bearish overall. Long term, Facebook, Meta, lower lows, I mean lower highs. Nothing much to say on that. Massive ass gap, but I doubt we're going to be able to fill that anytime soon, just because of the future outlook of Meta. Not only that, but the future outlook of the markets. Um, Again, not looking good. Not looking good, guys. We actually gave back all of the gains from post COVID. These are the highs. You know, we're already down below that. It's not looking good. Nvidia, we again, this is just a downward, this lower highs. We have a inverse, not inverse, damn, why I keep saying inverse, trend reversal pattern right here, or candlestick pattern, which is this hammer that we have there that bounced off of support. But again, the overall trend is down. If we could bounce off this level and break through the 181 level, definitely bullish to the 208 level, possibly even to like right here to the 195 level. And then from there, if we get past that, you know, there's even more targets to hit to the upside. But again, there's potential, but the overall trend is down. Google, same shit as QQQ and Microsoft. Falling wedge, trend reversal candle um, on large amounts of volume that hit like a pretty massive support level, or yeah, it used to be resistance. But we do have a gap to fill the downside. So ultimately, I think we're going to fill that during this recessionary period that we possibly can have in the future. Tesla, someone's been getting its cheeks clapped, my boy. Cheeks clapped. Downward trend, lower highs, lower lows. Once again, I don't really consider this a hammer, but again, the theory behind the candlestick is the same. Fall down, buyers didn't like that. They bought it back up. It wasn't strong enough of a buy back up to get back above this level, that 700 level. But we're in the middle of no man's land at the moment. That was previous resistance / support. So we'll see what happens from here. But again, lower lows, lower highs, lower lows. It's not looking good for the market in general. Broadcom, we had a double bottom, but it did break out of this wedge with increasing volume, so it's not looking good. Costco got obliterated because of fucking Walmart and Target earnings reports. Supply chain issues are definitely tapping into their margins, and it's not looking good for future outlook. A possibility that we could bounce off of is this long-term trend line that could be forming. Um, Again, in the middle of no man's land at the moment. There's no real support or resistance price action here at the moment. But those are basically all the tickers that I'm going to be looking at. I just wanted to inform you on what these charts look like if you don't have the software. Again, there's a lot of potential upside on all these charts, but overall trend is down, so be mindful of that whenever you're taking your trade. Middle of no man's land, so wait to play the potential breakout to the upside or to the downside. Uh, Again, I'm going to put out another video that's going to be talking about the statistical probabilities of where we could go, just because 7 red candles in a row has never happened before, and there'd be a green candle afterwards. But there has been 8 candles, 6 in a row, that happened twice in history, and both of those times give plenty of great returns afterwards. But again, we'll get more into detail on that in another video. In the meantime, guys, subscribe, follow the page, follow the Instagram page as well, and just hopefully play light with these volatile markets and be careful, guys, because you can easily blow up your ports in this type of situation.